The mood today is back to reality.
Monday was euphoric, but today it was pragmatic as markets settled back into wait-and-watch mode.
I think people are realizing, okay, we're back to the trenches. This is not going to be easy, and it's not going to be solved overnight, and it's going to be a long, slow grind.
As pleased as investors are to hear the government's plan to buy up $250 billion worth of stocks in major U.S. banks to get credit moving again, there's still apprehension. Markets ended today relatively calm, but slightly negative. The Dow closed down 77 at 9,311. The Nasdaq lost 65 and closed at 1,779, while the S&P 500 shed 5 points before settling at 998. But rather than tracking day-to-day market movements, investors now look towards the long-term economic indicators.
I think people are going to look very closely at the employment numbers, and I expect that they're going to be dismal. We had a rough few weeks there. We have some really bad news out of some large manufacturers, the automakers, things like that. And I think there's going to be a lot of negative news over the next few weeks.
It's going to be a busy week overall. We got CPI, we have housing, PPI, jobs numbers. We got earnings. Third quarter earnings start coming out more in force this week. We have Citibank and Merrill, two big ones we're going to be watching.
In addition to third quarter earnings, we're also going to see unemployment numbers. And in New York City alone, the city comptroller's office is estimating over the next 2 years, we're going to see 165,000 jobs lost. So as the government scrambles to get us out of this economic crisis, investors know that there's still a long way to go. In New York, Bonnie Ghosh, The Associated Press.